Shares of Palantir have been sinking lately and are heading towards their 6th straight day of losses on Thursday. Is this a buying opportunity or should you stay clear of this stock? The stock is on track to suffer their longest losing streak since going public, as the expiration of the lockup period sets to expire, which puts all the outstanding shares available to trade. What is a lockup period? You know, that is a great question, but to answer that, I'm going to need to go to the side camera. When a company like Palantir goes public like they did in September of 2020, the main shareholders, the employees that were issued stock, could not physically do anything with that stock for a set period of time. This is also known as a lockup period. Now, mind you, a lockup period is something that every single company that goes public goes through. This isn't just a Palantir thing. The company had roughly 1.6 billion outstanding shares when it went public. However, less than 500 million of those shares were permitted to be sold at the time, meaning all those shares that weren't allowed to be sold were in that lockup period, which is why the stock is inevitably trading down lower because there are way more outstanding shares now. And as history would suggest, if the company's stock has risen since its IPO, when the lockup period expires, there is almost always a sell-off. Trading volume for Palantir spiked to 165 million shares already on Thursday, which is nearly triple what the stock usually trades for at around 66 to 70 million shares a day. And it was enough to make the company one of the most actively traded stocks on the market. Palantir also said that if you like me or this content, that maybe you should consider subscribing and hitting that like button. During its 6-day losing streak, the stock has tumbled 34%. And from its all-time high of $39 on January 27th, it's dropped 35.4%. Helping fuel the decline of this stock was actually its earnings report that came out earlier this week, in which the company reported a surprise loss, although its revenue actually rose more than forecasted. However, despite its recent sell-off, the stock has still rallied 40% in its past 30 days. Is it a bit unfortunate that both the lockup expiry period and earnings came out that were a bit mixed in the same week? Or is this recent decline a buying opportunity? The stock is down roughly 30% from its all-time highs that it saw at $39 on January 27th. So if you believe in this company long-term, if you believe that it will bounce back and will be higher in, X amount of days from now, this might just be your perfect time to either get in or buy more shares. Full disclosure, I have zero exposure to Palantir, so I don't really care what you do, but it's always a good idea to just really look at a stock when it's dropped as far as it has and ask yourself, why is it dropping this far and will it bounce back? Well, we know why it's dropping, so now the question that you have to ask yourself is, do you think in the long run this company is going to bounce back? Let me know down in the comments below. Feel free to like and subscribe, and as always, I will see you guys next video.